What's going on, YouTube? It's Dave's Daily Trades, back with an update for AMC. So, we were down 10.75% today, with volume increasing to the downside. Not what we want to see. But in today's video, we're going to be breaking down the technical analysis, going over what I believe is the accumulation schematic that's going to bring us back into that $30 range, hopefully even higher than that. Also, we're going to be talking about some, I guess you could say, financial disasters that are going on throughout some other hedge funds. We'll also be breaking down the options flow using unusual whales. But without further ado, let's roll right into that intro and hop into the technical analysis. And we're back. All right, guys, just want to say apologies for yesterday. I literally did not leave my bed yesterday because I was so sick. Still getting over something. Who knows exactly what it is, so bear with me today. So let's jump into it and go over all of these ridiculous drawings so you all can make sense of it. So where we left off on Monday's update video was talking about this accumulation schematic playing out here. This can be found using the 30-minute chart, but also the 1-hour chart. And what I've personally been looking at is this right here, but I'll jump over to the schematic and show you guys this in real time. So what we have and what we've been looking at here is the accumulation schematic number 1, where you do have that spring action phase here. Now, why don't we have number 2? Well, it's because in accumulation schematic number 2, in phase C, you get these LPSs here, which is still above your lower trading range. We have fallen below our trading range, which is exactly why we are moving to accumulation schematic number 1. Now, this is okay, but what does this mean moving forward? So moving forward, we do have to really kind of activate that spring phase, and the spring phase is lower than your sell test in phase B. Our sell test in phase B, I'm putting it at that 2251 area. Now, I do know that we did see that $20.80 kind of jump, but really the biggest thing is this was a pre-market move down where we did jump right back into this range here of $22.48 and $25.32. So that's why I'm putting our sell test in phase B a little higher than that kind of dump over here. So what I do believe moving forward is tomorrow, what I would like to see is a little bit of selling pressure into this, I guess you could say like 21-ish, even high 20 area before kind of swooping back up and starting our test phases in phase C. What does that look like? Well, you get that spring, you come back into the trading range, you test once, you test twice, and you move up. But where would these test ranges be? Well, number 1, it would be kind of a gap down here, move up, test that 2275 area, move back in, retest that 25 before breaking back up into the higher end of our trading range, specifically in our SOS phase. Now, this is very unlikely to play out in one trading day. This is what I do believe is going to be playing out over the next, I would say, 3 to 7 trading days, somewhere between that range. Really, it all depends on A, your volume, and B, how we want to test these ranges. Now, like I always say, these trading ranges or the Wyckoff schematic don't necessarily have to follow the entire schematic perfectly, meaning we don't necessarily have to get a retest of these areas right here perfectly. We can move right into our LPS, our lower point of support phase, back in the middle of our trading range before moving up into SOS. And even in SOS, we don't have to have that bouncing around range in retest before we move higher. So it all depends on how the composite man wants to play this out on the micro scale schematic here. So that's what I'm really looking at, a dip below and then move back up tomorrow. Now, of course, we always want to go over worst case scenario. So if we don't get that bounce tomorrow in early pre-market, or even middle of the trading day, and we start to really continue this downtrend here that we're having, and I'll draw this out for you. where we've just been slipping down the rabbit hole, then yes, if we can't break this right here, then I do believe that we either A, will find support at that 2080. If we don't hold support there, I do believe we are going to go for that gap fill right around that high $16 range or even $17 range. However, that would not be the worst case scenario, because if we do look out and we go over here to the 1 day and look at our larger scale schematic, this could just be our terminal shakeout phase right here, where we do kind of bounce off that line here at $16, $17 before kind of jumping back up into our trading range, bouncing around and moving to our higher sign of strength. Now, one thing to really keep in consideration here is right around these areas, you do have lots of buying volume. If we look back here, volume was right around 107 million shares on the day. This is when we did have our sell test in phase B, but also more of our possible terminal shakeout. Unless this is our terminal shakeout here, we will find out more tomorrow. And also over here at this $25 range, we had 144 million shares traded. So buyers are absolutely aggressive in this range. We just do need to break out of this downtrend that is being established here. Once we do break out, I do believe we are going to A, see that buying volume start to increase, and B, just starting to see great movements back into our trading range, which is established by your selling climax and sell test in phase B. So that $29 and $30 mark. And yes, I do believe once we do kind of whipsaw back up and break this downtrend that we have been having, the buying volume will be there. And if it's not, then it is what it is. We come down, retest that $17 range, and then start our moves back up into this trading range. Now, enough with the charts. I do want to jump into some interesting things going on. First, we're going to go over Credit Suisse. What are they doing? Well, they're laying off some New York employees as it shuts the hedge fund division down. That's not good. But why is this happening? Well, it all comes back to Archegos Capital Management. This is going back to, holy shit, I can't even remember, but months and months and months ago. Archegos really had a downfall, and it was not good. But the biggest thing is it affected surrounding hedge funds in various marketplaces. And if we look back to this article by CNBC here, March 27th, 2021, holy shit, this was a while ago. What happened? Well, Archegos shut down because of forced liquidation. This forced liquidation came to propped up positions because of so much freaking capital, guys. And if we do remember, this is going back again to March 27th. You had Viacom, CBS, Discovery were down more than 27% for Viacom and close to 50% for Discovery. That is not good. It's over-leveraged positions that are absolutely clear in various other hedge funds. You all know, or hopefully you all know who exactly I'm talking about. But even else, guys, there's over-leveraged in this market to the freaking tits here. There is so much over-leverage and just pure greediness going on, especially if we look at AMC for the past 4 days. This is just absolutely ridiculous here. Dropping $8. This is all short sellers. This is all ping pong back and forth in the level twos. We know their tricks. We know what's going on. And it's just a matter of time at this point. But nonetheless, we're seeing still kind of spill over from this Archegos mess almost 7 or 8 months later. That's some crazy stuff here. Now imagine when some of these hedge funds in their short positions start picking up to them. It's not just going to be one fund that gets hit. It's going to be multiple funds because they're all, or a lot of them, are all in this together. Now, real quick, I do want to jump over to the updates from the Fed meeting today. Shout out Walter Bloomberg. This account right here posts great updates on just about everything. I highly urge anyone in the market to follow this right here. What we have is a chance of earlier and faster rate hikes. And I do believe that they are targeting the March area for rate hikes to come. But of course, guys, if inflation still keeps on growing as it is, well, we are going to see some very interesting things in the market. And who knows, this could come much earlier. Because if you do remember, back in November-ish timeframe, they were actually shooting for next summer, sometime around July. Now we're actually coming towards even earlier, March. And previous to this, they were actually assuming that rate hikes would come in 2023. So what's happening here is more of a reaction rather than pushing out good things. Things in the economy are really starting to hit a wall. Things are not going good. Inflation's bad, and they have to do something about it. Now we get to a point where they keep on kind of bumping this up because of the rate of how everything is spreading throughout the economy. But nonetheless, guys, I do want to show you how the S&P 500 and triple Qs kind of took this news today. Well, of course, as we know, came out later in the day, and look at this. Markets just started to plummet. And as we can see, most of the selling came towards the end of the day today, which was really interesting to see. In the morning, nothing really too crazy, but once the Fed came out, boom, we start dropping even faster with higher sell volume to the downside. If we look at the SPY, ETF that tracks it, well, same thing. That last 30 minutes of trading action, there was a lot of selling going on. So the markets are not taking this news lightly. They certainly do not like seeing this. And also, guys, as we know, AMC has been correlating with the overall market, specifically when we do shoot to the downside. Now, I do know there is the negative beta that should be playing out. And I know a lot of you may kind of hate on this, but I still believe that AMC does have that negative beta. It's just the fact that they're coordinating their short ladder attacks, their ping-ponging level 2s, whatever you really want to call it, with the downside to try to make the underlying security, as in AMC, look like it's coordinated with the other stocks, as in the S&P 500, the triple Qs, so on and so forth. So I do believe we still get that negative beta to play out. It's just going to come when the time is needed and when the time is right. Now, anyways, guys, let's jump back into this good stuff. Now, let's actually just jump right into the options flow. Really kind of mixed today, almost 50-50 from this filter here of 100,000 worth of premiums being paid and a decent amount of activity. Now, what we're seeing, as you can see here, is all puts. Now, this was pretty much split with either A, buying puts, or B, selling puts. Now, selling puts is good because you see that there is not much downside left, which is always great to see. And this kind of plays into our thesis where, we're on the SPY here, but we're going to jump back to AMC, where we could potentially see that downside coming in tomorrow. We do have a slight kind of gap down over here. You move and you kind of jump back to the upside. That's what I'm predicting. We'll see how it goes. Options data kind of looks pretty split for the most part. And what's being targeted? Well, a lot of these January expirations, and as we know, the open interest for the 21st is absolutely ridiculous. Even the 27th looks pretty good. So seeing activity around these dates here and these expirations is absolutely great to see. Now, if we jump into the daily expirations, some really interesting things that I want to point out here. A, calls still 65%, so we're outweighing the bears. But specifically, I do want to jump into the strikes and expirations. Well, the expiration, we do have a lot of bearish activity around that 3/18/2022. But nonetheless, look at the strike that is the most popular here. We have that $90 strike here that is extremely bearish. And this is some very interesting stuff here. But guys, I do want to just end on this right here and kind of just give you some good hope. Because I know this, whatever's been happening these past couple days, and even for, I guess you could say, the past couple of months, it sucks to see it. It absolutely does. Money's being lost. But look at this. On right over here, January 6th, 2021, we're at $1.91. Within a couple weeks' time, we went all the way up to $20 and some odd cents. That's a 900% increase within weeks. Now, look at this over here. We go May 7th, 2021. We're at $8 and call it 50 cents just to play it easy here. We shoot up all the way to $72.62 within weeks. That's a 700+% gain right there. So if we can go 900% and 700%, within just a couple of weeks, well, don't worry about 10% days, 11% days to the downside. Because just as fast as this stock can drop, it can 10x to the upside. So that's all I got to say for today's video. Hope you enjoyed, but be sure to hit that like button, subscribe for more content. Peace out, and I'll see you guys tomorrow.